Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 26th of October. So the last full week prior to the US elections, and it could be quite an interesting week with traders sort of getting positioned for, certainly from a risk sentiment perspective, going into next week's events. On top of that, we've got the US stimulus negotiations, which again are very, very market centric at the moment. Having said that, with timing going on, it's looking tighter and tighter for any kind of agreement to get past the Senate before the US elections. So all eyes are sort of focused on any progression there as well. And of course, the other big issue which is impacting on market sentiment is the coronavirus, and that again is numbers are increasing pretty drastically across Europe. Restrictions are increasingly being tightened, and the talk of a second wave and the fear of a second wave of the virus seems to be coming more and more a reality as each week goes by. So there's plenty of things there to keep the markets on their toes. Before we take a look at a few markets here, I just want to give you a quick update here on Wednesday's session. So what we do is we run the newsletter on the Monday. We'll take a look at a few markets. Things are always changing all the time, of course. So Wednesday we have a 30-minute live market session where we'll go and take a look at these markets, see how things have developed from Monday, and also take a look at a number of markets that we're keeping an eye on going into the second half of the week. So you can join this session live, and you can find out more information by taking a look at the link below the video. Okay, so let's have a look at the markets here, and if we have a look at oil first of all, oil is very much a market that is driven on economic activity. You can see at the moment price action for the market here has been sort of contained within a sort of couple of tight bands for quite some time. So this was after the coronavirus sort of crash back in sort of April. Then we had the rally, and the market has really failed to break out higher of this sort of consolidation and get north of that $45 level. At the moment, price action sort of broken through a key level that we've been looking at here, and that's around that $39 level. And if I just zoom in on this on the daily time frame, you can see that the $39 level now sort of been taken out in early trade this week, and it does open up a trading window down to, well, around that sort of 36 level is the sort of next structure point, as you can see, but possibly these two lows here, so that's even slightly higher than that, so maybe sort of 36, 37 could be the area, but that's still quite a distance to the short side. And if we come down to the lower time frames here, we can see that the weak sentiment here in oil prices started late last week, and we've taken out a couple of key levels here around the sort of 39.80 area, and now down to this 39 price point. So we can see on the 4-hour time frame that below 39, well, we've got a trading window there down to the 38 area here. Prices have broken through this 39 level. It is fairly extended at the moment, so it's not surprising we're seeing a bit of a retracement. So some sort of retracement back into 39, back into that sort of decision point area. If we see sort of further weakness starting to come in, that could be starting to look like a interesting sort of proposition for a potential move back down to the short side. We can see at the moment that the indicators are still looking sort of bearish. So again, pullbacks on the oil market back into sort of 39 is certainly something that we're looking at as potential sort of weakness for newer moves to the short side there. Oil, of course, very much sort of driven on world economic activity, oil prices, and with the sort of tightening restrictions that are coming in place across the northern hemisphere with the COVID-19 situation, certainly sort of plays into that from a sort of fundamental perspective as well. If we come over to the Dow now and take a look at the Dow on the daily time frame, if I sort of zoom into this, you can see also that the stock markets are starting to look decisively more bearish as well. So we've got a sort of double top sort of formation here, but the more important thing here now is that the trend is now starting to form on the daily time frame to the short side, and we've taken out a significant price point here, this 28,000 price point on the market, which really does make these markets look particularly bearish right the way across the time frames, even up to the weekly time frame now. So you can see that last week the market tried to punch underneath 28. It promptly retraced and got above that level, and now we're back underneath it again. So momentum looking weak on these markets. So again, same sort of scenario that we're looking at here is some sort of retracement on these. This is early trade at the moment, of course, and we've got the Globex session at the moment, so we certainly we're looking at opportunities within the cash market. But if we open up this on the 4-hour time frame, you can see the structure levels and the number of structure levels that these markets have taken out to the short side, and we've got significant sort of lower highs forming and rejections of significant sort of price points as well. So at the moment here, again, our bias is to the short side. We could see some sort of retracement here, and maybe some sort of trying to drive the market higher when the cash market opens. So I'm just sort of mindful of that. But again, sort of further weakness, we're looking for again positioning to the short side. 28,000 is a very key level here for us. Just below that is 27,930, and that really does then sort of open up the market to some newer moves and more significant structure points to the short side. The bearish optimism, I think, would we could reconsider that once the market gets above 28,340, and you can see that the market has tested this. This has been quite a significant level from an intraday perspective on this market, and there's a long way for price to get back through there to start to look more bullish. So at this moment in time, we're looking at more bearish opportunities here on US stocks. So coming over to currency markets, I think one of the biggest focuses is the US dollar. We're seeing some in early trade this week. We're certainly seeing some focus towards the risk sentiment, as I sort of mentioned earlier, and we're seeing the US dollar strengthen. And again, the dollar is in a sort of longer term short structure, but that doesn't mean to say that for the next sort of week or few weeks or even month that we might start to see a bit of support in the US dollar. Now that means that markets like the euro could be under pressure, and euro dollar to the short side is certainly things that we're looking at. And some markets here like the yens, and you've got here sort of Singapore yen, which I think is one that's looking quite interesting. If we have a look at this from the monthly perspective, we can see that from a longer term, and of course this is very much a longer term structure on the monthly chart, we've got sort of lower highs forming here, lower lows, and the market's just sort of pulled back into the geometry zone here. There is significant resistance above the market, and now we're starting to see some weakness coming in. So, you know, is this market sort of poised to roll over and continue its move to the short side? And if it's going to do that on the here on the macro structure, there is some significant distance to the short side on this trend structure. If we come down the time frames and start to look on the daily time frame, not all of these are going to look wonderful in geometry or structure. We can see that the daily time frame, we've got highs which are now being sort of resistance at the high end. We've got sort of lower highs and lower lows forming on the daily time frame. And if we have a look at this on the 4-hour time frame, you can see that we've got quite a significant level here around just north of that 77 area, so around 77.80. You can see that we've got significant support forming here, again in the context of a sort of short move. So we're looking at areas here to see if this market actually sort of breaks through this level. If we do, then there's some next sort of trading structure is possibly down here to around that sort of 76 area. So there's some significant distance to the short side too, and this level It's looking quite interesting on the 4-hour time frame, but not only that, but also on the lower time frames as well. So there's a few markets there that we're keeping a close eye on going into the beginning of this week. I certainly hope it helps, and look forward to speaking to you on Wednesday. Bye for now.